right. What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Labs. It's another week, so you know what that means. It's time for us to start our weekly market analysis, where we come to you and we bring all of the hottest charts. We tell you exactly what levels you need to look out for throughout the week and exactly what you need to do to trade well throughout these few days that we have left throughout this trading year. So with that being said, man, I'm half of the Bison Trading Show crew. I go by the name of Ty Trades Futures, and of course I'm here with my guy.
You already know, man. It's your boy, aka. I'm the D Guy, Pro Financial, man. I hope you guys are ready because a lot of the things that we talked about or we actually executed on Friday, a lot of them played out well. So we're not going to hold up any more time. We're just going to jump right on in and let's get busy.
All right. So with that being said, that leads us into our analysis for this week. Let's go ahead and get it started. Now, you guys know my favorite two pairs. I love the Dow Jones and I love Dollar Swiss. So we won't deviate from that tonight. We'll continue to go over the same pairs that we always do. We want to keep that consistency going. We want to keep it flowing. Because one thing about the market is that the longer you trade a pair, the more you understand it. It's certain little innuendos that you won't understand about a certain pair unless you watch that pair. I could try and trade something else, but it's just certain things that you won't know if you don't keep your eyes on the chart. So since it's the beginning of our week, let's go ahead and look at the US 30, aka the Dow Jones Industrial Average. Let's look at it from a weekly perspective to see if anything new happened. And from the most part, we're still in the uptrend that we've been in for a very long time. You know, one thing about the Dow Jones is that the uptrend has been so strong over time. You could go all the way back to when it first came out in the 1800s. It's been going up ever since. There has never been a drop or a crash that it hasn't recovered from. So always keep that in mind when you're playing this market. Now, if we zoom into where we're at, we have those two tweezer bottoms from before. So more than likely in the longer term picture, that sets us up for the next leg of the uptrend. We know that that's coming. Now we just have to kind of figure out on the daily and the hourly and 4-hourly charts where exactly we can hop in to take advantage of this uptrend that we see is happening in the market right now. So when we break it down to the daily chart, remember we were talking about this reversal period off of the 50 moving average a couple of weeks ago. From that point forward, we continue to make another higher low. We had a new one form on June 3rd. That was Thursday last week before non-farm payrolls. And after non-farm payrolls came out, we came back to retest the top of this wick at 846, 34,850 really. And ever since that point, we've pulled back. We're in the 600s right now. So let's break it down to the 4-hour to kind of get a better picture. The 4-hour looks kind of similar to the daily. So let's drop down to the hourly chart to get the best picture for this. Now, what I noticed is that last week I told you guys about this double bottom, right? When we bring up the support and resistance, we'll be able to see that these double bottoms actually formed off the major zone of support that me and Darren were talking about last week. We saw that double bottom form the day before actually the same day as non-farm payrolls came out, and it led to an up move throughout the rest of Friday's trading session. So shout out to all of my traders who caught that uptrend. Now, ever since that time, prices have been moving down. We had this big, huge impulsive move down, and look at where we came back to, all the way back to that same point. And we had the same exact thing happen. We had two long tail candle wicks happen right here to form the double bottom. We came back to that same area, made two long tail candle wicks to form once again another bottom on top of that. Let me bring it up. On top of that zone, right? These wicks kind of pushed a little bit into the zone, but nothing to worry about, just like these wicks from before. So we should expect that right there indicates to us that the market definitely has a lot of demand down there, which means that the bulls are still in control of this market. So now that we've made a higher low right here at 610 in comparison to where we came from at these double bottoms, now that we have these higher lows, we should expect prices to move higher. Once we break past 675 and we continue to close above it, I would see us probably moving up to retest structural highs at 850 and then eventually move on to make a new all-time high. So I'm looking for prices anywhere above 675, a higher low anywhere above there. I'm hopping in and taking it back up.
Hello, yo, yo, yo. Just bear with us, guys. Bear with us. It's having little technical difficulties. Ty is gonna pop right back in any second, any day now. He's gonna pop right back and say, "Yo, he's back." Yo, Ty, where you at? Where you at, my
I'm here.
boy? Oh man, that's
I'm here.
crazy. You back? You good?
I'm here. They tried to play me.
Yo,
Well, it's raining over here, so my Wi-Fi might be in and
it's
out a little bit.
it's
So,
it's raining here too though, so I got all bars though.
well, I wish I could say the same.
You
I got
got
all
all
bars
bars on
right
your
now.
Wi-Fi? Where your bars at on your
Yep.
computer?
Right now, I got all bars. Gotta take advantage while we can.
Okay. But yeah, you was like it made all time highs and you was saying pretty much once it retested that high and that's where it kinda like cut off. You said right after that high it retested and then you said you was gonna kinda
So did I tell? So did you guys get the part about these double bottoms down
yep,
here?
you said that it came all the way down, one came into the zone but nothing really to worry about when you went high the signals. It popped right into the
Yep.
zone, and then you said we should be still looking for the overall uptrend. And then you called the spots of 34,675 going to 34,850.
Yeah. So that's pretty much that's my move right there. That's what I have planned out for these next couple of days. We break above 675, we should move back up to the top of structure. So D, let's pass it over to you. Let's get your thoughts on the good old US 30 and what you see happening this week.
All right, all right. So pretty much unhide my moving averages. So pretty much overall uptrend. That's the only thing we're looking for. Like Tiberius said, the economy since 1800s, this has never ever fell and collapsed in any moment. It might have had its down periods, retracements, but every market has a retracement period. So once you have that in mind, you just know pretty much the buy is majority of the time of what you would try to look for. Not to say that selling can't happen either, but hey, let's drop it down to, well, you're on the weekly, so go to the monthly right quick. I want to make sure that the moving averages are all above each other. Same, same. All right, so drop down to the daily. So like we said, the overall trend was definitely daily. Like we said, we want to do the top-down analysis just to make sure everything's there, but we pretty much knew that the overall trend was up. But I want to drop back down to the, I think it was like the 1 hour, but go to the 2 hour. And I want to point out those wicks. So what I've also definitely noticed throughout my trading, uh, whatever you say, my trading career, is that when these wicks poke out like that, and they have multiple rejections, and they come hit a particular price and they close up at higher prices, you can definitely best believe you can highlight those wicks. And actually, just looking at this, just bare face, you can kind of see an imaginary line kind of starting with this red wick over here, and it's just going across. Go to this red wick over here, add over before the 26th. Yep, that one. So yeah, so even if you keep the cursor on there right there, you can just see that the line goes straight over across. So if you just even highlighted just that area before kind of any of this happened, you had multiple chances to get in, excuse me, for a buy, to capitalize, to retest uh, the top of structure. But now you can best believe where we are right now, because the last prices that we used last week was 34,540. So where's 34,540 at? You hear me?
Yep.
34. Okay, that's 34,540. And where is 34,520? Like right below it, right?
Yep.
All right, so those were the prices that we were looking for last week to get in for buys, and we were looking to take it to 34,650. Where's 34,650? And how much percentage of that is from 34,520 to 34,650? Okay. So we can either say 127 or 0.3% of your account. So just knowing that, I would actually kind of either wait for prices to try to come back down to test that area again and then try to go back up to structure. I kind of feel like even though we kind of got the double bottom right there and then we just been making our way up, there's a possibility we may not have enough momentum to come down and to just get a retest. So I would first put an order somewhere down in the 540, 550 area first, and then I would put a area at the top of the bodies. You see where the wick kind of, yep, right there, the bodies, or the break of those bodies. Go to the 5 minute because I want to see how high is high, how low is low. Okay, so we are kind of sitting down at lower in the lower area of prices, and those double bottoms actually line up with the highs over to the left. So that's also a good sign. So I will probably stay with the side that I'm going to say I want to retest off of 34,550. No, I'm sorry, not 550. 34,600. Yeah, I want to try to get either a test off that there or that low at the next level up. I think probably 650. No, that's not. No, no, that's not 650. Go back down to the low. I think it's like right there. So I guess maybe 620, 34, 620. Yep, I want to try to get a retest off of 34, 600, and 620. 34, 620. Let me see now. Let me see these levels again. So 34, 620 is right there. And where's 34, 600? Is that all the way? Yep, at the bottom. Where is it at the bodies? 603. Okay, so that doesn't matter. All right, so yeah, those are my two levels, and I want to take it back up to a structure at 34, 680 at the top of those highs again. So how much is it? How many pips is it from the 620 or the 5? No, I'm sorry. I said what's this one that I said 620
Yeah, 620.
and
680.
620 and 600. 600. Those are the two plays I want. 620 and 600. And how much is it from from down there to up there? All right, so yeah, a quarter of my account. So I would definitely take that 80. Um, now don't get me wrong. Go to the 2 hour again. You want to make sure you have your confirmation set because you don't want to catch yourself in a pullback or a retracement, and it since it's so volatile, it might eat your account before it actually goes the way you're going. So even though the overall trend is up, ever since we retested 34,800, we just been making lower lows and lower highs. Right there. So since that happened, since we hit that high area, we've been making lower lows and lower highs. So I guess until pretty much the a higher high and a higher low forms and my lower areas are retested, and that's why I may even feel like it could possibly come back down to 5, maybe 575. 575 or 550. But I don't think nowhere lower than that. Yeah, because and I think with those wicks, that's like whatever's down at the bottom down there is very strong. It pulls down. How much percent is just the wick? How much thing is that? Just the wick. 93. So that's a lot to eat off of your account before it goes you know what I mean? Before it goes in your direction. So I would try to get it as low as possible. I don't think it could come back into the 34 fours. It's possible the high fours, like maybe 475, 480, but 400, that's probably like the golden area. If you can get it from right there, you good. Matter of fact, and I would even I'm gonna put 34 400 just for the sake of it. So just to recap, the overall trend is up. I'm looking for prices to come down a little bit lower, somewhere from where we are right now, which is the 600s. I'm looking for it to come back down into the fives or even the fours, 34, 400, before I begin to set up for a buy. Like I said, if it doesn't hit those levels, I'm just not going to just jump in and do a market execute. I want the price to come down into my level because I want to buy low, sell high, and I want to make sure I don't buy at higher prices when I could have gotten it lower. So that is my analysis.
All right. So there we go, good people. That right there, that's the Dow Jones. And if you guys don't know, US 30 and the Dow Jones, it pretty much represents 30 companies that give a good picture of where exactly the economy is and where exactly the stock market is. So it gives you a good gauge as to what those two things are doing. So make sure you tap back in on Thursday so we can get a recap for these levels that we went over and we can see exactly what we want to talk about going into our Friday live trading session, which you know will be live and official this week as it always is. So that leads us into our next pair. We have good old dollar Swiss. Now with this one, the downtrend has definitely picked back up once again. We've been telling you guys about it since forever. So let's go ahead and look at the monthly charts. For all of my long-time viewers, you already know what I'm about to say. For all of my new-time viewers, listen up and pay attention. This sets the outline for everything we need to cover. So ever since 2019, this pair, the dollar Swiss, has been in a very strong downtrend. It's went from a high of $1 all the way down to 89 cents, making lower lows and lower highs along the way consistently for the past 2 years and some change now. So that pretty much tells us what we're looking for when it comes to right now in the moment. We're looking for the downtrend. So when we're looking for downtrends and we know exactly that the trend is strong, all we have to do is find levels that used to be very strong supply areas. Look for those levels to get hit, and then we go short from there once we get confirmation. Now on Thursday, me and D were kind of telling you guys that we felt very funny about the price action that we were seeing, right? So Thursday was June the 4th. June the 3rd, right? Is that correct? I think, yeah, June the 3rd. So when we were talking to you guys, we were telling you that we were probably going to see prices move up and retest structure because we were having a conversation about how even though the trend was down, we were seeing so many bullish signs. We walked through it, we compared it to prior price action we've seen previously, and we pretty much said even though the trend is down, we feel like it could definitely come up and touch structure. And that's exactly what happened when the non-farm payrolls number came out. So that's why it's always important to understand like how news can relate to the chart. The chart is going to move in the direction that it was already moving in more than likely. It's just going to get there quick, fast, and in a hurry. So when we actually had that move from non-farm payrolls, it sent us up into that level. Now, once we got up to that level, look at what happened. We formed a double bottom, and from that point forward, we formed a double top. And from that point forward, the trend continued down. We had a huge impulsive move right back down to where the non-farm payroll number started from. And from that point, we had lower highs, lower lows, lower highs, lower lows. coming back down into structure. So we know that right now is definitely not a good time to short because we're at lower prices. So we need to see prices come back up and retest major resistance levels. So let's just look to the left and point those out. We have our first one right here at 89.90. Our second level right here at around 90.10. And then you could definitely say a third one up here at 90.25. So me personally, because we're at lower prices, I feel like the retracement could be strong. So I would personally put my orders up here at 90.10. If we can get 90.10, I think we could definitely see prices move back a little bit lower. But let's actually look at the 4 hour because I want to make sure that you guys get in at the best possible prices. So honestly, I would say, yeah, 90.10 right now is looking very appealing to me. But if that level gets broken, don't be surprised to see prices come back up to 90.25. But for me, I would go short for 90.10 if we can get that price, and I see all of my confirmation signs.
So you said 89.92.
Yep, 89.90 for an aggressive entry, and then 90.10 for a conservative entry, more moderate.
Okay.
So I would say that if prices do break 90.10, they're definitely coming back up to 90.25. But overall, we know that the trend is down. We're looking for entry points back into the short trend. I hope you guys like those prices right there. We'll be patient and keep our eyes on this throughout the week because we know, based on the price action that we're seeing, that we'll probably have a big time move this week, one way or the other. So with that being said, let's pass it over to Darren. Let's get his thoughts on on dollar Swiss and where he forecasts it going for the rest of this week.
All right, so we're just gonna look at the monthly really quickly. In the monthly, like we said, we want to make sure there's nothing really out of order. We want to make sure, at least for ourselves, that higher highs and lower lows and lower highs have been formed, or in this case, the market has broken down below both of the moving averages, and looking like the market has been really been respecting the moving averages, especially the 20. We got a nice little test or retest off that 20 moving average, and now we're making our way down, and it looks like we've broken that little structure going up, so to say, where we were just at going up. Those two previous candles broken structure, and we can definitely probably expect some more bearish movement of this particular pair. So let's drop down to the weekly. So the weekly is even a little bit stronger. It lets you know that the market did have some bullish momentum in the beginning of not in the beginning of 2021, but right before April, we got a huge big push up to the upside. We made that high, tested the 94.50. Is it 94.50? No, 94.46. We tested that area, and then we just been shooting down ever since. So the market crossed up over both of them, and then crossed back down over them. So that's another sign that the bears are still in control. So hop over to the daily. So like we said always before, by the time you get to the daily, you should have somewhat of an idea of where you're going in this market, or if you don't have a conclusion by now, it's probably either best to either be patient or to wait for this trade to come to you or just find another pair. But in this case, everything's lining up. The 20 is below the 50 moving average in all cases. The market has been really respecting the 20 moving average. So now we can begin to look for entries into the market. Just like how Tiberius pointed out, when we're going down, we're looking for previous lows. Tiberius pointed those out perfectly. He said the first was the 90, I think it was like
90.10.
No, I wanted to go up higher. Maybe have enough momentum to go up higher. So that's the first low. Well, that high and high match up. So move up a little bit. Yep, where that high matched that low. 90. I don't think it would ever have enough momentum to come back up here, but this is the market, and it's been, it does whatever it wants. But I probably have to agree with Tiberius probably on the areas he kind of pointed out, just because we've been having a lot of wick rejections in the area where we are now. And also, to me, where we're looking at right now kind of looks like a head and shoulders pattern, where we have that nice little double top right where we are right now. and then we have the left wick to the left. So go down to where we are now. Nope. Move up. Now go to the top. That's the head. Now move over to the left. Come right down diagonal. No. You jumped over the shoulder. Right there is one shoulder, and we can use that area of that green wick to follow it over so the market can retest that area for a head and shoulders pattern, and then we should be able to look to move down. So let's actually unhide the signals because I want to kind of try to highlight that area. So can you put a nice little zone over just the green wick where it hits that 20 moving average? And at first I didn't kind of see it, and I was just like, wait a minute, does that look like a head and shoulders pattern? Yep, so just go up to the wick. Now slide it over to the right. So now instead of kind of zoning in on maybe just like one particular price, like we said, 90.25 or 90.10, we can probably use this box as a group of prices. So what is the price at the top of the purple box?
Yeah, 90.25.
90.25. So yep. So 90.25 is that, to me, would be like the highest area I would see the market going before it would decide to come back down to continue its down movement. If we don't get that much momentum to come up even into the box, it's a possibility that the market could just come up, hit the 20 moving average like it's been doing, and then make its way back down. So, there's two particular boxes we can kind of focus on. This box that we just kind of formed at the top, and then our next box would be go to the red candle so where you are right now, go to the third candle over to the left. Yep. So just that wick, if I would put a box right across there as well and be like, all right, so if it doesn't have enough momentum, which would probably be like the same box. So it would actually start from the top of that red candle, and then it will go all the way, extend all the way up to the top of that green candle. And then that entire area will be my group of prices in which I would want to be like, all right, if the market doesn't have enough momentum to stay down into this box, then I would have to reconsider the down move. But until then, I would use these boxes or these so-called zones as a guideline on where to get in and out. So let's drop down to the 2 hour really quick. So yeah, you can kind of see how like the head and shoulders is a little stretched out now more that it's on the 2 hour, but you can kind of see my ideas a little bit more on the daily. But it's kind of the same thing. If the market comes into that box where we just drew before we drop down, notice where the bottom of the box aligns with. It aligns with the cross of the moving averages. Is that a coincidence? I don't really think so. And then kind of follow that price all the way over. And notice that we have, over to the far left, we have multiple wick rejections. No bodies has really closed into that box. Only wicks has pushed into there, and the market come down to close, and then finally we got a breakdown out of the box, retest, and a shoot all the way down. So in this case, I mean, we are at lower prices right now, which starts at the 89.50 and probably goes all the way down to like the 89.30. So just those spread of probably 200 or 20 pips. Yep, 30. Yep, right there. Will probably be like the area that we have to be cautious in. And the last time it was in this area, it went up. So for me, like I said, the overall trend is down. I'm looking for prices to come back up into higher prices, which would ideally be that purple box which we drew, somewhere anywhere between that box or even just the bottom of the box would be good as well. But the down movement's been really, really strong. And I feel like that duality level where this red candle lines up with that. So go to where we are right now. Now go over to the left, and I'm going to tell you when to stop. No, you went way too fast. Right there. Now go up. Go to the top of that candle. Yep. So that wick right there. Some about that wick. Now follow that price all the way over. Not all the way over, but just a little bit over. Yep, to those wicks right there. Being that wick right there lines up with all those rejection wicks, whatever's sitting there, I don't think is gonna have enough momentum to break that. So maybe the box is too high. But yeah, either way, I'm still looking for prices to come back up to higher prices before I decide to go back in. But that's my analysis. Oh wait, before I go, I want to make sure I get my areas. So the areas I want to do is, did I say it? And did I say it? I don't think so. I want to do, you said 90-25 and 90, excuse me, 89-90 and 90-10. And did you say 90-25 too?
Yep.
Okay.
Worst case scenario.
Worst case scenario. Okay. I'm gonna rechange mine. I'm gonna change it to the duality level where I showed you where that red wick sticks up over the 20 moving average. Yep, right there. So what's the price at the top of the bodies? The top of the, yep. 89. I'm gonna say 89.80. Where's 89.80 at though, for real? Okay. 89.80. And if not there, go down a little bit to that low over to the left. Right there. I think, but we are kind of like right there already. So, yeah. But give me that price right there anyway. So 89.70. But I think since we are already there, I probably feel more comfortable with the 89.80 area. And if not, where's the area where they cross? 9.97. All right, so there's my prices. So just to recap, 89.80, 89.70, and 90 cents. Those are my prices. There you go.
So that right there is dollar Swiss. Now, of course, before we move on, one thing that just popped into my mind: sure that there's no important news coming out for dollar Swiss this week. Because if that's the case, then we can just bank off of pure price action, and we don't have to worry about anything popping up. So if you want to figure that out, you can just pull up your calendar. I like to use Forex Factory, but you can find this calendar anywhere on any platforms, really. So Monday is already passed. Tuesday, nothing red. Wednesday, red for Canadian, Euro. Oh, CPI, 8:30 a.m.
Is that Friday?
Price index. That's Thursday. On the 10th. So that should be important.
What about Friday? Anything good on Friday morning? No?
Nope. So for the most part, the biggest thing this week, CPI for USD, and then we have European Central Bank press conference on that same day at the second time. So Euro dollar should be moving. Dollar Swiss, maybe. But no big news outside of that this week. So we can pretty much rely on our price action for the most part. Keep those levels in mind for dollar Swiss. With that being said, let's pass it over to Darren. Let's get his 2 pairs tonight. Let's see what he's bringing to the table.
All right. So pretty much we're going to kind of recap of what we did last week, or at least our trading session on Friday. So I know I want to kind of go over a pretty good trade. I feel like maybe I could have held it a little bit longer, but either way, I still came out with a W, and that's something that is something to celebrate. But let's just break it down, and then we're going to start from the top-down analysis. So, like we said, the top-down analysis is just really simple. You're just making sure that everything is aligned as far as your moving averages, higher highs and higher lows. In this case, the 7 is above the 65. Prices have been making higher highs and higher lows. We found a ceiling at 2070. So this is pretty much the next all-time high. This zone that I drew across was previous all-time high. So being that we're still kind of stuck in that zone, huh?
Make sure you share the screen too.
I'm not sharing my screen. Yeah. Now start over. Sharing my screen. All right, you guys can see me now.
Yep.
All right, so just to recap what I said, so pretty much 20 is above the 60, the 7 is above the 65. We're just looking for make sure higher highs and higher lows have been formed or vice versa, lower lows and lower highs. In this case, the 7 is above the 65. Higher highs and higher lows have been formed, but we found a ceiling right here at 2070, and from there we just been kind of making our way down. But notice how this is the new all-time high, and that this over here, and I made sure I drew a box to kind of highlight it, which was the last all-time high of this pair or gold. So being that we're kind of still in that zone, we should definitely probably expect some action to probably happen soon. Me personally, I think that being that we've been having since we found this ceiling here and we've been making lower lows and lower highs, I think prices could possibly come back down um, a little bit lower before it decides to come back up. But we're only going to trade what we see and not what we think is going to happen. Also, I drew this kind of like little wedge pattern, and like we went over in our last, not our last stream, but a stream before, the wedge pattern, which pretty much it extends from, an all-time high or a high area, and you bring it all the way down, and you make sure it hits, the outermost wick, and kind of do the same thing for an uptrend. You kind of do at the not all-time low, but a lower area, and then swing it around to where it hits an outermost wick or body. In this case, we drew a nice little one, but in fact, we got to break out of that wedge, and it looks like we getting a retest or have gotten a retest already, which was the top of this down trend line. But I feel like maybe prices were just so strong, it wasn't going to have enough momentum to come all the way down to retest the downtrend line which we formed. But what I really want to highlight on this one was just this wick right here. Notice how it came down and hit a previous high, even though the high is more up here. But this was once, no, it wasn't, because this was a high. But it hit a high of a candle, and it looks like a nice little duality level. It looks like it broke out of it, and then we got that retest down. So maybe this was that area in which it needed to retest in order to continue to go up. This wick hasn't been finished forming yet, so we still probably have some more hope. So we're going to drop down to the monthly. Kind of the same thing. The 20 is above, the 7 is above the 65. A little bit more bigger, clearer picture of the break of the little wedge pattern we have. And actually, when we drop down to the wick, it looks like it hit it exactly on the downtrend line. So this is probably exactly what we were looking for to now continue to try to make higher prices. And actually, I think this is actually might be a good area to hop into. Um, like, and I don't usually say this, but right now would possibly be a good time to hop in, just because we don't have this much formed yet. But being that we got such a clean break and a retest, I feel like now would be like the perfect time to hop in for a buy. But like everything is patience and let the trade come to you. Just don't jump right in immediately just because you know that setup. Um, we got such a clean retest. It's like we got that retest and now we're pushing up. But we've run into some trouble into these wicks, which has been hard to break for the last couple of times. We had maybe one, two, three, four, five failures to try to break this zone or this high area, and it went down to try to get another running start, and then now it's pushing back up now. So we can either get another retest of these highs at the top to either come get a retest at these for a double top to possibly continue down, and it's not going to be an up move, because really, since since it hasn't made higher highs and higher lows, yes, it has been making higher highs and higher lows since down here, but none of these highs have been really broken yet. So really, until this high is broken is when it's officially a higher high and higher low. We're just now just regaining some of the space that we lost, so we're just making our way up right now just to retest levels that we were once at before. So I think that until these areas up here are really broken is when higher highs and higher lows is being formed and buying should happen. So just by me looking now, it's just like, yeah, we're in an overall uptrend, but I also feel that we could possibly still be in a retracement phase, and that price is going to come back down a little bit more before it goes back up again. So just looking just right off of here, I did monthly, weekly, daily. I think I would, like I said, I would stay more so with the buys on this one. Um, like I don't know. I feel like I can kind of argue both ways, but maybe me arguing both ways could be kind of pushing it because, like I said, until this is pretty much broken, or even this is when higher highs and higher lows is going to be formed. It's been making more lower lows and more lower highs than anything. So, like I said, if we can get a retest at this double top and get a failure, is probably when I'll begin to think about shorts. But until it probably breaks, I don't know. I'm kind of stuck in between, and I feel like me being able to kind of argue both sides is probably not a good sign. And like I said before, the reason I'm saying is that we're an overall trend, uptrend, higher highs and higher lows has been formed, but no major higher highs has been formed. So that's technically not a higher highs and higher lows yet. So pretty much I'm going to stay on the side of being patient right now and waiting for a little bit more confirmations. But the sell people, I'm going to give you a quick little thing before I pass it over to Tiberius and buyers. If I was a buyer in this particular market, like I said, where we are right now is a great area. I would want to see prices come back down to kind of retest these so-called low areas. If we can come down and get a retest of these lower areas and stay above this box, I will be all in for the buy. But if it, what was I going to say? So for the buys, I'm looking for a retest to come down a little bit lower. Once I get a rejection, then I'll be going up. The reason why, like I said, the reason why I don't want to do buys just yet is because we haven't got broken of major support. I mean, major higher areas. Let's also see what else I want to say before I pass over. Okay, so buys, you're waiting for price to come down to these lower areas and reject and stay above this up box down at the bottom. Sellers, you're looking for price to come back up to these higher areas to retest and reject, and this is where your area you would want to get in to hop in for the sell to capitalize more. And just taking it from this high prices back down to the bottom of structure would definitely be a good play for anybody. That's actually a lot. So, and this is gold, which is very volatile. So, just to wrap up my analysis before I pass over to Tiberius, um, we're still in the consolidation area. It's just been moving sideways, so that's why I'm kind of probably in the middle. Buyers, you're looking for price to come down to this lower area, stay pretty much above this green line. Stay above it, and that'll be your green light to go in. Sellers, you need that buy move to happen in order for your move to happen. So always remember, for every good buy move, we need a sell, and for every good sell move, we need that buy to happen so we can get higher prices to bring the market back down. So buy low, sell high. So Ty, I know you got a lot of things to say. What you want to tell the people?
All right. So for me, what I find interesting when it comes to gold, I like the fact that on the daily chart we have made double bottom that started this overall uptrend. We made a double bottom towards the bottom of structure, and ever since that time, we've really been able to move higher. So we have this double bottom at 1680. From that point forward, we move higher. We made a higher low. We pushed up to 1790. We pulled back down. We retested our moving averages, and so far we just been continuing to move higher. So for me, I'm looking for continuation of the uptrend, being a little bit patient. What I like is the fact that on the daily chart, we did move down on that non-farm payrolls number on Friday. We had an initial downward reaction. But that right there, if you look at where it lines up with what used to be major support. So if we follow this level to the left, we see that it lines up with an all-time high from over here in January at around 1870. So on Friday, all prices did was have a very violent move back down to that level. They overshot it a little bit, came all the way back down to 1850. But we had a long tail candle wick from that point, bounced off of it, and we're continuing to move higher. So that right there, the false breakout, usually leads to a very strong move and continuation of the trend that's already happening, which in our case is up. So I would be looking for a continuation for the uptrend. I like the fact that this long tail wick happened. I think we could definitely come back, retest the top of structure towards 1910, 1920 ish. So that's my overall price target for gold. I'm looking for a long move up to around 1910 to 1915. And I would probably say I would like to get in. I feel like right now we're definitely a little bit overextended. So I would say maybe if you can catch gold at 1880, maybe 1881. Best case scenario, maybe 1875. So 1875 or 1880, that would be my ideal price target for gold. And then I'm looking to take that bad boy up to 1910, hop out, and call it a good trade. So that's my analysis for gold. I'm looking for the uptrend.
All right, all right. So just to recap, I think my areas of gold. Let me reshare again. My joint is that have been like freezing, bro. So just to kind of recap some areas, and I think I'm gonna actually recap again too, Ty. Your price. I know you said your price. I want to write it. I don't think I wrote it down. So for me, like I said, if I'm looking for the buy, I'm pretty much looking for price to come anywhere between that 1890 level to even as far as down here, which I don't believe, but I would just go with the 1890. And you can see over here, there's the point 8090, so you can kind of use the quarter levels for that, but we would kind of really stick with the 1890 for buys. And what was your level, Ty?
I like 1875 and I like 1880.
Yeah, I like the 1882. I was about to say that 1880 is right here. Wait, where's 1880 at? Yeah, 5, that's why. Yep, 1880. Yeah, I just feel like this wick hasn't even really even touched it, so I'm gonna just probably just go with it up top up here. So the 1884. All right, but yeah, so those are good some good levels, guys. And like I said, when the overall trend is up, we're looking for the retest of previous highs. When it's going down, we're pretty much looking for the retest of lows. So we got the break of this low, we got that right here. So we haven't really broken this yet. So this would be kind of probably another area to look in to buy into when making that move. So buy low, sell high. I know it sounds very cliche. So let me see if there's anything else I want to say before I move on to, I think, UCAD. Something about this area right here kind of really sticks out to me. Yeah. I feel like this too, just covering over that. I like this right here. This is fine. And the bottom of it is 1882, 1887, 1882, 1887. All right, so that's pretty much my analysis on gold. So let's slide over to UCAD. UCAD, we went over UCAD because UCAD was one of the currency pairs that was affected during the non-farm payroll last Friday. And I believe their unemployment numbers came out as well, and they weren't as good as they projected it to be, which possibly caused it a strong down move. Even we're just looking, even before I even got to it. Oh no, this is the monthly, so it's already been going down. So let's see what type of impact it had when we get on a lower time frame. So right now, it looks like the overall trend is down because we got this found this ceiling up here at 1428, or as high as oops, we got it as high as 1.4662. So all here, it pushed up here and just closed all the way down here. And like I said before, anytime you see that, whatever's sitting up here, it's going to take a lot for it to break that area. So as of right now, we're sitting at very, very, very low prices. If I was to just drag this over, you would see that this line in particular is an area or a low area which the market has struggled previously, not once, but definitely twice. After we got the break of this structure, after we got the break of this structure, we had two tries, maybe even three. One, two, three, four. So we need to understand that the last time it came to this area, this is a very, very strong demand zone. So let's drop down to the monthly. But the 7 is above the 65, which is a sign of bullish activity. But just looking at what we're seeing, that's why we always analyze, is that yeah, we're in an overall uptrend, but we had a huge push down recently from the beginning of March. This is 2020. That was last year. So it's just really just been going down of March of last year. So let's drop down to the weekly. So the weekly kind of tells a little bit of a better story that yeah, we are at lower prices, but it's now consolidating. Is it getting enough momentum to break this area, or we're gonna just follow suit like we did last time and just get out of here and try to retest the top of structure? I also feel that the down movement could possibly be so strong that this was the actual movement it needed to break structure. Um, it needed that third or fourth try. So we could be that one, two, third time is a charm. But we need to wait for that signal to happen. So let's drop down to the daily. The daily kind of lets us know we've really been playing around in this zone for a little bit, for some days now. So we need to understand that this area could be a sign of a very strong demand zone, and that the market possibly could be making a V pattern reversal, which means it just reverses at this area and just breaks lows and highs on its way up. So I think for me, I don't really have a clear cut direction. And like I said, if I by the time I get to the daily, if I don't have a clear cut direction, just kind of be a little bit more patient. And the reason I don't have the clear cut direction is like, yeah, we are in an overall down move, but things are still kind of looking a little bit uppish still. It hasn't really broken this kind of like this seat, this floor, so to say. So if it's still kind of staying in this floor above this duality level, technically we're kind of still in the buy. But if we're just using the moving averages, they don't align up. And when the monthly, weekly, and daily don't align up, like I said, 9 times out of, let's just say 7 times out of the 10, means that we're currently going against the market trend. So if the overall trend is down, retracing would mean that we're getting some momentum to try to push up, to try to retest some levels that we've previously broken, and then we're going to make our way back down. So I think for me, I would kind of take my little chance on going short, even though going short, and I think my reasoning. Because I think my reasoning is on the monthly is telling me that the overall trend is still up. But when I drop down to the daily and the weekly, the moving averages are lining up for the side of bears. So I feel like I would kind of just stay on the side of the down move. But you know what? Being that it's a little bit hard for me to even to make a decision, I think I'm going to stay on the side with this one. So let me give you some areas that I had. Which areas did I have before? Where's UCAD at? I write down some areas for UCAD. No, that was AU. UCAD was a new pair that we picked up because of the non-farm payroll. So since I don't really have it charted up too much, let's just kind of just go off of what we just know. If we're in an overall downtrend and we're looking for areas to kind of get in, some of our first areas to go to are previous low areas. So our first previous low area is this area down here, which I probably can just line it up right here. This lower area here. If it comes back up to this area, finds a ceiling, and this could be the area it decides to move down. But if this is the most obvious area, then obviously the next area would be here, which would be here. If prices come up to this level, finds a ceiling, then this will be the area it goes down. And then so forth and so on. So I would think I would draw maybe one more box, but I would want this box to kind of cover little two areas, which would be which would pretty much be these lows down here lining up with these bodies here. So if it can come anywhere into these, either one of these boxes and find a ceiling or resistance, that will probably be my area to sell. Because mind you, if we're going to sell, we want to buy low and sell high. So once it comes up to these are the areas where we would sell. Like I said, for buys, you're sitting in the perfect zone to buy. So, I mean, you can really just begin to use some of the things that you know we taught you in some previous streams was if you're looking for a buy, you obviously want to get down at lower prices. So if we're sitting right here at the green line, then obviously the red box right where they're crossing that I have it highlighted will possibly be your ideal spot to hop in for a buy. Either this little consolidation area, or we would draw another little consolidation area, which would be kind of geared to down here. So if it can come into this area or this area and stay above it, these would be the areas, the ideal areas we will hop in for the buys. Yeah, those are my areas for the buys. And for every, like I said, for every good sell, you need a buy. So if we're looking for the sell move to happen, the things I'm saying about the buy must happen first in order for your sell to happen. But that's just my opinion, and you know the market can actually do vice versa and just not go to any one of these lower zones and just shoot up from right where we are right now and just go to the zone. So and maybe let me just go up here before I pass it over to Ty. Maybe this red zone maybe is just a little bit too big because now I'm kind of looking now. I'm pretty much just okay. Here we go. These would be probably more my areas for looking for rejection because I just feel like when I drop down to the like 2 hour, it just looked those boxes just looked way too big. So that's pretty much my analysis. So Ty, tell the people what you're thinking about this one.
All right, so for dollar Canadian, we know that the bigger picture, we see a strong down move on the daily chart. So let's go back to that price point. Let's go back to that time period on the daily. Let's check that out. And hydro signals. So what I'm seeing that overall we definitely can see the downtrend so far. Now we've come off of the most recent leg of the downtrend that started between April and May. We shot all the way down to almost 120. Now once we got to that point, notice how we start moving sideways and we formed a consolidation zone, which is one of my favorite setups, especially coming off of a bear move like we just came out of. In the market, everything has to eventually take a break and take a rest. But that doesn't mean that it's over. It's just pause for that particular moment. So what I like to see is the consolidation patterns because it makes it simple for me. All I do is I go over and I try and find the top of the consolidation zone, the highest price point, and then I place my sell orders up there because normally in a downtrend, when you come into a consolidation area after a move, after a bear flag move like this, prices usually come back, retest that uppermost resistance level, and then they continue moving down. Now, sometimes it might not happen the first or second time. That's what creates the consolidation zone. It's the back and forth, the back and forth. So I like to take trades in the direction of the trend that kind of give me the best risk to reward. So let's break it down to the hourly chart so we can see what I mean. All right, let's zoom out a little bit. Well, let's zoom out a lot, actually. A little bit more. All right, that's perfect. So as we see this chart, we can see that we have pretty much a natural barrier at around 121.40. So that's the price point that I'm looking forward to potentially open up my short trades. I want to see prices come back up to that level. And then once I see any type of bearish rejection, so that includes bearish candlesticks, bearish price patterns, bearish volume, maybe exhaustion volume running into that level. Any type of bearish activity on the chart, once I see that, that counts for me as my confirmation. Once I see the rejection off of those levels at 121.40. Once I get that, I think the ideal short trade could be coming my way. So that's what I'm looking out for this week when it comes to the Canadian dollar.
All right, guys, there you have it. There you have it. UCAP wasn't normally on my lineup, so that's why I really didn't have it kind of charted up. So maybe I would begin to keep this in the lineup moving forward. So it's other than that, it's really been moving kind of like how we projected it. So let's kind of just see how this plays out. So that's pretty much our analysis, and I think what we're gonna do now is move on to our exploration section. For anyone new, our exploration section is a section of the show that gives us a chance to really give you guys and explain to you guys what the financial market has to hold, what other options are, because I know every Tuesday, Thursday, and Friday we go over Forex and U30 and dollar Swiss, but there's other and so much other financial vehicles in the market out there that that drives and you can make money in. So we want to be that exposure to you guys, and maybe you can take that and do a little bit more research and probably figure out maybe that's the best route for you. So I think what did we do on Thursday?
We talked about creating a plan for news events.
Oh, so pretty much what we did was we created a plan for non-farm payroll, and I think pretty much what that was that you since we had such big impact on non-farm payroll for the dollar Swiss and I'm sorry, not dollar Swiss, the U.S. dollar and the Canadian dollar, which was the unemployment rates, which found out how much jobs was added to their economy. I think the U.S. did pretty good. I think they might have added 500 something thousand jobs, and the Canadian was down as far as jobs being in the market for them. So we just prepared to make sure that the areas that we had, we wanted to make sure we went over, isolated, and we're going to keep our eyes on that. But I think what I want to kind of go over tonight, which was a stock that I kind of gave an idea to a friend to, and then it began to move up, not a lot, but it did for me to tell someone to hop in, and then it began to make up moves. And that and it's going to actually be a stock for tonight. I don't know how often we go over stocks, but we're going to definitely hop back into stock tonight. And what SNDL is a Canadian cannabis manufacturer that's based in Canada. They do all the pre roll ups, and I think they're going to be a company where a lot of like the medical facilities will go to and get their medical equipment, because if you guys don't know, medical and recreational are different when it comes to like the THC levels. The medical marijuana is more like capped at like 34 or whatever, 35%. Where recreational was more like, we don't know what we put in this, but you need to be careful, and that's pretty much the difference. It's more like regulated, more monitored. So I kind of want to go over it tonight because I felt like this could be like a good conversation for anyone who doesn't know about SNDL. It's like I said, it's a cannabis stock based in Canada. Um, and I feel like don't didn't we say like a lot of like the oil stuff was in Canada too?
Yep, Canada is real big on crude oil.
Okay, so I feel like, we already have a lot of business established in Canada, so it's nothing new with the US and having business in Canada. So let's just kind of like go over SNDL just really briefly, and I'll kind of just pass over time, get his ideas and what he thinks SNDL should be doing in the next couple of months moving forward. So as you can see, we just strong down movement, nothing really crazy, but you guys have to really pay attention. There is another step to like when you're trading stock, and that's pulling their financial statements. I think if you dig through one of our live episodes, we kind of showed you guys what financial statements to go over, and I think one of them was like the 10K, which was like all of the documents in one: your income statement, balance sheet, and cash flow statements. And those statements are important to kind of go over because you want to make sure that whatever company that you're investing into, you want to make sure they're actually making money. A lot of the times, companies, count money that's owed to them as a part of their revenue, kind of sort of. They just put it on their books as like an account receivable, and they actually count that as like profit or like gains when it's really not even paid to them. So a lot of the times you have to really get in and dig and analyze like what type of liquid they have on hand, and if anything ever came up, do they have anything liquid to break down to save their company. So I want you guys to definitely dig up and find that that episode where we went over the formulas that you need to kind of know, and what things on those financial statements that you need to know, and those 6 formulas in which we kind of went over that you guys should probably look into, and then maybe add that onto your extra step on whether you want to invest in a company, especially if it's like long term. So just looking at this, just we see that it started up at such a high price, and it's just ever since it opened, it's been going down. And if you ask my opinion, I feel like the reason why it even started to go down is because when we begin to really have talks of being legal, a lot of people didn't agree with it. Like it was almost like the what's that period in the 40s with alcohol?
Prohibition.
Prohibition. I feel like this was the prohibition of like marijuana, and like the beginning of it being legalized. Like yes, it opened up in 19, but it's just been going down ever since. We made a high at $3.89, but we quickly got out of that price area. But kind of notice where we got that retest at. That retest was at a previous high in which the market was at previous in the past. So let's drop down to the daily. So I think the more and more uh, marijuana begins to get legal is when these particular weed stock will begin to go up, because it's going to be more morally accepted, more accepted because it's legal. And second, I feel like being that this is a weed company and that their stock is like at $1.15 or $1.16, I mean, like shares are $1. I feel like there's really not much. you can really lose because like you can just put $25 up, get almost 20 shares of SNDL. And then like if once weed goes 100% legal all over the United States, you can best believe this price at 389 is only going to be a low price we're going to talk about in the future. And like, oh, can you believe that was actually a previous high when now we're all the way at, let's see how high this thing goes. I'm pretty sure we get somewhere in the 500, 700, even 1,000. What was that $3 and something change that we wanted to invest in? So I feel like when things that you pay attention to, especially marijuana, what's going on in the world, everything's in your face on what to invest in. That's why when people ask, like, what should we invest in? It's all around you. Like, what are some of the things you like to buy? If you like to buy phone posits and you a sneakerhead, there you go. You should buy shares of Nike. If you like Apple products, you have an Apple Watch, you have an iPad, you have, all these products, why not invest in an Apple? So, it's just another thought for you guys to think about. Ty, is there anything you want to talk about as far as like stock and, some things, that people should probably know, or even just SNDL? So give me some of your thoughts, man.
All right. So when it comes to stocks, just like Darren said, and like we touched on in some of our previous episodes, you can find it on YouTube under our stock episode that we did. We talked about the importance of understanding the market that you're trading when it comes to stocks. So when it comes down to companies like SNDL, you want to make sure that you not only understand the technical aspects of the chart, but you also want to understand the fundamental aspects that go behind it. Because see, stocks don't just move randomly where the price is just when the market opens, it's going to go up or down. Stock prices move based on the fundamentals. So if people think that a company is good, more than likely you'll see an uptrend because you have more buyers and sellers. So it's important to understand financials because it can lead to you understanding that technical portion of it. And that applies to companies just like Sundial. So I don't know, Darren, what do you think? You want to do a full analysis on this company or you just want to look at the chart?
Just look at the chart, man. We're not gonna give the people all that, man. We definitely know we're going to save some of that for, maybe No, actually Thursday we're gonna go over something new. But no, just go. We don't have to need to go light because we definitely went over SNDL before. I just wanted to kind of bring it to their attention because I know possibly when we talked about it before, it was up in the $2, $3 area. So now it has gotten a chance to come back down to the dollar area. I just wanted to kind of go over maybe some areas to possibly hop into and possibly some take profit. So that's all I wanted to go over on this one.
All right, so if we look at this chart from a technical perspective, let's look at what we see. We can see that prices, like they had that big move at $3, they came all the way back down to 50 cents. That's a big time move to the downside. But that 50 cents level, if we follow that to the left, not only does it kind of doesn't line up perfectly with the 65, but it's pretty doggone close. And it also lines up with previous areas that used to be high levels before. So even on a crazy looking chart like Sundial, technical analysis principles still hold strong. So now that we've kind of come down to the 50 cent level, and mind you, we always talk about the quarter, halves, and the whole number levels. 50 cents, that's a very important half number level. So keep that in mind too. We bounced off of major levels of support. We kind of had a rounded bottom. And from that point on, we moved off of 50 cents. We moved past the 65 and the 7 moving average. We broke back above the dollar. We shot up, actually had a nice gap. That gap got filled on Friday whatever day that was, Thursday, when prices came back down and retested a dollar. So now we should expect prices, if they respect this technical analysis that we're seeing, we should expect to move a little bit higher, at least back up to $1.40 for right now towards the top of the structure. All we need to do is see prices just continue moving higher, and we should be good. But if not, then I would suggest that buyers, you still need to be patient because overall, if we look at this thing, the long-term picture, definitely down. But in the moment, right here today, right now on, what's today's date? June
8th.
June 8th. I would say that I'm looking for prices to continue back higher to $1.40 to test structure. That's my move.
All right. So yeah, man. So That's why I wanted to bring you guys. That's why we added this section here in the shows, because like we wanted to talk about more than just forex. So that gives you an idea, like, yeah, maybe this could be an industry I want to invest in. And this is the perfect time to actually hop in. Like, there's not a lot of stock out there, especially emerging markets like the marijuana industry and stocks like that, whose prices are at $1. I don't know no other stock that's pretty much at $1, unless it's, new startup companies or so forth and so on. But this one I feel like is fairly new as well. But I think, when did they open? I think they opened up in 19. Yeah, they opened up in 19. They went public in 2019, and we're now in 21. So I would say that is definitely fairly new. So I just want you guys to remember this industry. SNDL is one of the top uh, weed companies that all the news talk about. Even if you go on the news, and you would see when they talk about medical marijuana and some of the legislation that's being passed, these are the companies that they're talking about. So that's pretty much what I wanted to say on this particular stock, and that's pretty much going to be my wrap up for the exploration. We'll definitely have something new. We're going to try to figure out if there's anything else that we never covered. And if once we covered everything, we'll probably just, dip back and find different things we can, talk about, because the financial market has so much to offer. So that's pretty much it with the exploration section of the show. And now we're going to move into our last and final section of the show, which is Traders Talk. And the reason why we added this particular section to the show is because, we wanted to actually break down and have real talk with our audience. We never want to just flash the money or profit and returns in your face and not show you the work that comes along with it. Because trust me, a lot of people who are profitable traders and are consistent, they had a lot of trouble being where they are right now. And it takes a lot of face time to really master these charts. Understand these markets and charts, they all repeat themselves. Once you know that this market is not going to ever go into places it's never been. Well, we're not going to say that it's never been, but 8 out of the 10 times it's moving in which prices has been there before. And it's all about knowing those particular areas and lining up with the areas. And for me, like, the more that I've traded and done this show, like, I, there's things even when I explain to you guys that even help me with my trading, experience. It's like the things that I say out to you guys, I'm like, oh snap, like I see it even better, because when you explain things, it's like you're saying it out loud rather than kind of thinking in your head. Because when you're thinking things in your head, they always sound perfectly of what you're thinking, but when you say it out loud, it doesn't sound as crazy. Or if it does sound crazy, you're like, oh snap, I just said something crazy. So it really has helped me, even doing this show. Secondly, I want to note you guys, which was first, which was the repeat in prices. Second, just really believing and understand this is real. And if you can just put in the time, and the capital is going to come. So once you master these charts and do the back testing, I know we haven't really done too many shows on back testing. So I know I keep saying that we're definitely going to put it in play. We're going to do a show, or I guess just the show back testing again. I know we had an episode like that. Maybe we can do like a part two, or just do like a recap or another crash course on how to back test. But back testing is real, and it's actually looking at prices in which the market came to previously. But just being dedicated, looking at markets, and putting in the face time is the only thing I definitely want to push you guys on. And thirdly, which is really, really, really helped me, that's why I tell you guys to definitely always bring a notebook and a pen. Because when you write down those levels that we go over today, and then we pull up on Thursday, same time, same place, and we look at these levels and even notice that they're either at the prices that we're talking about, did exactly what we're talking about, or everything that we said, it did what we said. So, and sometimes there's cases where it went complete other way. But me writing down those prices definitely keeps me in the mindset of all those prices and levels that I had in mind, and I didn't forget them. And it's not really like trying to come back up with prices again. It's like I wrote them down, I have them, and just following the whole week. You'll see. Just take 5 days. Just try this out. Take for 7 days, and you're trading 7 either consistent days or 7 of your trading days. Write down your levels when you chart up on Sunday, that Sunday. Write levels in which you think the market's going to go to and whatever. Keep that journal for the whole week, and you'll notice how when you went back to those levels and you seen the things that you said were going to happen, either if it comes here and reverses or come here and continues, it's a place you can come back to and refer to. So, Ty, is anything you want to tell the people to have them take in their pocket before we slide out of here?
Yeah, actually, you know what? I wanted to talk about the non-farm payroll numbers from Friday because in Thursday's session, we told you guys about how to build a trading plan around the news event. Now, I know one of the things I told you guys was that from my experience in the market, when I see the non-farm payroll number comes out, sometimes the initial reaction that you get that day may not actually be the long-term move. And I just kind of wanted to touch bases with you guys again and show you exactly what I mean when I say that. So let's go ahead and pull back up US 30 and let's just take a quick look right here. You can see what I mean. So let's actually move down to well, first let's look at the daily chart. This today was the
Today was the 8th.
8th. So Friday was the 4th. All right. So let's look at Friday's date. We look at Friday, big time up day. We had a very nice day. We came from a low of 510 all the way up to about 707. So that's a good 250 point a day. But notice, ever since that day, on Friday, we've been moving down throughout the rest of the week. On Monday, we moved down. On Tuesday, we moved down. If we go back to the hourly chart, we can see exactly what I'm talking about. Follow the volume. Every time you see a big cluster, that starts a new day. So let's go back to the 7th. You see the 7th, lower prices. You see today, we had a down move, it bounced back. So when you have the non-farm payroll, sometimes things can actually have a different long-term effect than they do in the short term. And if you're actually looking for those things in the market, when you notice them, you might be able to hop into trades early before the rest of the market is able to see what you're talking about and see what you're trying to do, which actually makes it better for you as a trader because before you hop in before the masses, guess what? You get the best price. So you can use these types of relationships in the market to kind of help you understand what's going on and what could potentially be coming. Combine that with your technical analysis, put those things together, mix them up, and you'll be able to take some really good trades in the market. So make sure you keep your eyes on big time news events coming out. We know we talked about CPI coming out later on this week, Consumer Price Index. It's not major like non-farm payrolls, but it's still a red event. So it'll be important for us. So let's see if that same concept applies for CPI, Consumer Price Index, this Friday when that news comes out.
All right, there you have it, guys. Just the real deal talk, man. So we're just gonna wrap it up for the night. So please tell everyone, tell a friend, to tell another friend, and tell another friend to please hit that follow button. Tell them to download Twitch. You can get in contact with me on my personal IG at I'm the D guy at IMDGUY, or you can slide over to our newly created IG page, Bison Trading Show. We haven't put too much content on it just yet, but we're definitely moving forward to add some new things over. You can hit my boy Ty at his links at.
You guys can make sure you follow me on both Instagram and YouTube under the name Ty Trades Futures. Over on YouTube, I'll be trading live. I trade live in the mornings to kind of give you guys an idea about how I work my own strategies in the market when it comes to futures. And make sure you tune in tomorrow. I'll be live 9:15 a.m. trading the Dow Jones, so make sure you tap in for that one. And then also on Instagram, follow me under the same name. I do a series called Trade of the Day where I break down one of the trades that I took throughout the day, and I tell you exactly where I got in, what I saw in the market that led to me getting in, what the market environment was like, what I learned from it, and hopefully what you can learn from it too. So make sure you slide over there. And most important, make sure you follow. the Bison Trading Show page on YouTube, man. We have
Yeah,
a whole
man.
catalog over here. Whole
Yeah, man. It's
catalog. Like,
building. It's building, man.
you guys see this? This 1, 2, 3, 4, 5, 10, 15, 20, 25. We have 27 videos over here, you guys. So don't miss out on them. Most of them are hour long, so it's plenty, plenty of info over here that you can use to your advantage. So make sure you get over here and subscribe. Bison Trading Show on YouTube, and like Darren said before, newly created Instagram page, man. We're taking over the social media space. If you didn't know, we just came here to remind you guys. So make sure you get on the train before we leave the station.
All right, guys. There you have it, man. I appreciate every one of you guys for pulling up tonight. All the faithful viewers who pull up every Tuesday, every Thursday, 9:30 p.m. and our Friday live sessions at 9:10, 9:15, opening of the stock market to see what's going on and how it affects our daily trading. So, with that being said, man, we're going to be here same time, same place Thursday. You already know what it is. And for all you people who've been with the show for a long time, should definitely know what my next